Hey everybody, welcome back to another live this Sunday evening. Please let me know if you can hear me. I'm not sure, it's a different setup this time around. I got some lights shining on me, so yeah, so I'll probably be sweating because the lights cause me to sweat. But thank you guys for being back this Sunday evening. I just want to check, as always, just to make sure we're live. Happy Sunday, happy Sunday. Again, let me know if you can hear me. Hey, MH08, he said loud and clear. All right. Do I need to adjust the volume down or should I turn it up, or am I good to go? Hey, Dad. Sorry for this house cleaning stuff real quick, just a different setup. So I just want to make sure we're good to go. And then going forward, hopefully everything should be good. So we won't have to worry about this setup again. Sounds good. All right, perfect. So first, now that I have this light above me, I'll probably be sweating more often because I sweat a lot. Whether I have a hat on or no hat on, I'm just a sweater. So I need to make sure, you probably can see it already on my, I need to make sure that I bring a towel for me now. But anyway, thanks for coming back and joining me this Sunday. If you guys are new to the channel, don't forget to like, subscribe to the channel as well. Hit that notification bell to know when we go live over here. We go live every Sunday, 7 p.m. Eastern time. David said, I like the new channel banner. Thank you, David. Thank you. I appreciate it. I'm working slowly but surely over here. I'm trying to, advance things over on this channel, and I'm also the young guy that you told me to look into as well on YouTube. I've been kind of following some of his advice as well. So we're trying to refresh things over here. But as you all may know, we're going to talk about, of course, mortgage rates dropping a little lower or softening. And I can see the sweat coming down my neck already. Look at this crap. I also just ran out to my car real quick because I was trying to get some tape. I had the tape in my car, so now my neck is sweating. So anyway, sorry about all this, you guys. I apologize, but I had to jump on. If not, it would have been about 15 minutes later. But anyway, we are going to jump into, if you guys don't know, we all know that the mortgage rates have softened. And so let's look at the mortgage rates real quick, and then we'll jump into some stories around mortgage rates as well. So I'll share it on my screen and I'll make it bigger so we can see it. And then, as usual, we love to have conversation over here, engage in real estate topics. We don't get very political over here, but I don't mind political discussions. It's okay. Let's see, we're gonna get a little bigger. So as you guys know, with the Friday, the job report came out in regards to the labor market, and it showed weaker signs in the labor market. So with that being the case, mortgage rates took a dip. Hey, what's going on, Corey West? Nice to see you as well. I'm doing good. I'm just sweating over here with these lights beaming on me. So I'm like, that's why I usually just use the regular light. Don't use this ring light because I just be so hot. But we're going to try to work it out. Maybe I'll get some like LED lighting or something so I can put on the side of the ceiling or around the ceiling. So then that way I could just use the regular ceiling light, and then I can get rid of this ring light, and hopefully it'll get more of a texture to the background as well. But I hope you're doing well as well. And so we'll jump into this real quick about the mortgage rates. And let me know your thoughts. As usual, we have conversation over here. We talk about this real estate. We talk about what we're seeing. As we know, every market is different, so it's very specific to your market, very local to your market. So just what I might be seeing down here in the metropolitan area of Georgia, of Atlanta per se, not Georgia, of Atlanta, you might be experiencing something different because every market is very local to where you're at. So definitely, outside of what you hear on this channel, go explore other channels, and then also try to find a channel that is very similar to the market that you're in as far as the state of that realtor or lender or whoever might service that market, because it is different. But it's always great that you guys are here watching this channel as well. But needless to say, it says mortgage rates plummeted back to fall 2024 levels It says it's a well-known fact that the monthly job report is more capable of causing big reactions in rates than any other economic data. It happened last month in grand fashion, and it's happening again this morning. It says the non-farm payrolls, NFP, which is a count of new jobs created, came in at a mere 22K for August versus a medium forecast of 75K. This is actually not the biggest miss when it comes to the NFP, but it's big enough to spark a reaction in the bond market. It says right here, in general, weaker jobs numbers prompt investors to buy bonds. When investors buy bonds, the price of those bonds go up. When bonds go up, rates go down. And so we kind of talked about this before on another live. As we all know, when investors buy the bonds in this 10-year treasury market, in the 10-year treasury per se, the more bonds that are bought, interest rates go lower. The less bonds that are bought, or if the bonds start to dip and the investors take their money out of the bonds and put it somewhere else, the bonds then dip, and then interest rates typically will go up. So that's how it kind of levels out in regards to mortgage rates. I shouldn't say interest rates. Mortgage rates will typically go up or down in regards to the bonds that the investors either buy or they pull out. And with that being the case, on Friday, if you guys didn't know, the mortgage rates softened a little bit. Did they drop a point or 2 points? No, but it did soften a little bit. So it says today's net effect is an average top tier 30-year fixed rate from 6.45 yesterday to 6.29 today. This is back in the same range as low rates in the fall of 2024. So did it drop all the way back again? Did it drop all the way back to 2022, 2021, 2020 rates, even 2019 rates? No, but it dropped back down to 2024 rates. So it softened a little bit off of that. And so we'll kind of dip right into real quick so you guys can see the mortgage rates for the different, oh, it's right here. For the different, excuse me, sorry. Where is it at? All right, so right here is kind of showing you the different mortgage rates. I don't know if you guys can see it. Let's explore these real quick. And again, remember, just because you see this rate on the screen, this is all has different type of layers in place. Things vary according to credit score, according to your debt to income ratio. There's so many different factors that create how much you might put down, how much closing costs you might get. There's a lot of factors that contribute to your interest rate or your mortgage rate. So just be mindful that these rates that you see on the screen are just a very overview of what it could possibly be. It might be higher, it might be lower, it might be here. You just got to remember that it's a lot of factors that play into your mortgage rate when you go and you try to get pre-approved for a home loan. So just be mindful of that, because I know some people look at these rates and like, oh, this is where my rate should be at. No, it could be up, it could be down. So it said as of Friday, again, it might change. Typically, rates kind of move around on day to day, week to week, month to month. I'm not a lender, so let me specify that too, because I'm getting into this financing conversation. I just happen to follow a lot and make sure I'm up on the data. However, you definitely want to talk to your lender as well. Do whatever you got to do in regards to if you're trying to purchase. If you currently are pre-approved, maybe talk to the lender and say, hey, I'm currently pre-approved. If you just entered into a contract per se of a house that you're buying, and you had a certain rate, if they lock the rate, ask them, do they offer the float down to kind of float the rate down for free? Sometimes the lenders will change you to whatever rate it is when you close. So just have those questions if you're currently in the process or under contract, because typically they don't lock your rate in until you have a contract in place and they start going through the underwriting and all those things like that. So just be mindful of that as well. So 6.29 for a 30-year conventional fix. 15-year conventional fixed 5.6%, a jumbo 30-year 6.2%, 7.6 ARM, so adjustable rate mortgage is 5.59. A 30-year fixed FHA is 5.95. A 30-year fixed VA is 5.97. And again, it might go down, it might go up coming Monday, but we'll just have to see. But that's where the rates fell on Friday. All right, so now what does this mean? That was the whole topic of today's live. Rates went down. We kind of touched on this before about rates going down, dipping down. But now what does it mean? So I have this discussion amongst other colleagues of mine as well in regards to the rates. But before we do that too, let's actually jump into the job report from CNN as well, so we can kind of get a little bit more information in regards to this job report on CNN. So what happened, what we kind of saw. Again, you guys, let me know. Just make sure there's no echo in it as well, because I was testing this. I'm on a microphone now, so I was testing the microphone out, and there was some echoing coming back. So let me know if there's any echo, any feedback in regards to an echo. Do you think even if your interest rate fall, will it make a difference in mortgage payments? So interest rates will make a difference in your mortgage payment. It depends on how big of a drop you see. So if you're at 7%, it drops to 5%. It could possibly be $1,500 to $2,000 difference. I think that's correct with the math, but it could definitely be a a big amount as far as your mortgage monthly payment with an interest rate being lower. So it does make a difference. However, I do, and I know most realtors argue with me about this, and I've always had this conversation with a colleague down here that I talk to, and he's in real estate, I'm in real estate. And we always have this argument that I feel like home prices should adjust down and be more affordable for the average American, because as we all know, as time goes on, and we want Gen Zers, we want alphas to be able to own said real estate and have this American dream that is put in people's faces. As you grow older, you get your own house, you get a car, you have a family, you pick a fence, blah, blah, blah. If you want the next generation to be able to have these luxuries per se of buying houses and owning stuff, we have to make it affordable for them to do so. So even with the interest rate adjusting down, we still need affordability in the home prices. And that's where I'm going to stick at. I'm going to die on that hill. I know some realtors don't like me saying that, because the argument that I had with my one colleague that's a realtor, he always states, well, with him having, buying his house a couple years ago, he being able to buying it prior, the crazy pandemic and prices going up, he's amassed a lot of equity. And with him amassing a lot of equity, he does not want his equity to basically get taken away because home prices are adjusting down. However, I feel like if you don't have no plans of selling in the next 10 to 12 years, what's the problem with adjusting the home price, the equity down? But that's just me. So I know some realtors will kill me for that. David says, sound is much better. You are good. Okay, thank you, David. Appreciate it. So let's kind of dive more into the labor statistics coming out on Friday. So it said America's job market flashes yet another warning sign about the economy. Right here it says what we covered here, the latest employment, blah, 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 stagnation. Let's see. Okay, let's just click on this one because, well, let's just highlight it because it's better. It says the latest employment snapshot from the Bureau of Labor Statistics paints a bleak picture of the current state of the economy under President Donald Trump. The labor market deterioration, just 22,000 jobs were added in August, dramatically lower, which you talked about earlier, and expected 76,500 new roles. In regards to the job market, the negative job growth for the first time in nearly 4 years. The economy lost jobs with the decline of 13,000 positions in June. So at the same time, we do know people are getting laid off. Some corporations might be closing down. People are, trying to get employment. Some people are shifting. If they were working at a certain job and they just bought a home, they might have to shift to cover said mortgage. So they might be doing gig economy jobs, might be trying to find another job in the labor market that's softening as well. It says rising unemployment, the jobless rate rose to 4.3%, the highest level since 2021. And then it's talking about stagnation. It says the data underscores the extent to which consumers and businesses are struggling to accommodate the weight of tariffs, stubborn inflation, the decline in America's crucial immigrant workforce, and overall economic uncertainty. So there's a lot of different things in the pot that is causing a lot of uncertainty throughout the economy in totality. Again, we are here to talk real estate, but all this matters when you put it in the pot, because as you guys can see, it is affecting how real estate is currently moving in 2025 in America. Hey, MH08, he said, I knew the hangover from the pandemic was going to be at least 10 years. Yeah, it's gonna be a while before we kind of see things level out. I feel like we were still recovering from the GFC, which is the great financial crash as far as the housing market. We were just kind of getting out of it. And like, because typically they say it takes about 10 years to kind of correct and kind of starts to settle down and balances out. And so we went past that 10 years, but I think there were still some things in place that still needed to kind of be settled out. And then we entered into a pandemic, which is an unknown that we've never seen before in America prior to maybe like the Spanish flu and all those things back then. But we never seen it in our century. Well, I haven't seen it in my century. Let me not say for everybody else of my years of living until 2020. And with that being the case, it caused a lot of uncertainty there. And it had people doing things that they typically don't do, as far as like we saw the Feds lowering interest rates just to make sure the economy would be strong enough to survive during a period where people were either getting laid off, jobs were closing down, and they just needed to make sure they could find a way where people would be able to survive in a sense of uncertainty and jobs closing down again and people not being able to work. And with them doing that, they should have actually raised the interest rate sooner than later, but they kept it going for a while, which caused a lot of rapid inflation to hit even more. And with that being the case, now we're here with this economy and this housing market that is very, very interesting. Is unlike housing market that anyone has seen. If people tell you they've seen this before, then I want to know, when did they see it? Because this is an unseen type of market in which no one has ever seen or experienced before, outside of of course, the pandemic. But now we're shifting from the pandemic to what we're seeing now. So this was very interesting in regards to with rates dropping. Prior to rates dropping, if you guys don't know, the new construction housing market is having they're having a hard time selling some of their homes. So their homes are not moving like they were moving during the pandemic. They started to build more because people were saying that we needed more homes built due to not as much inventory on the market. And with that being the case, these home builders bought some land maybe in 2020, 2021, 2022, and they're just finally getting through the red tape of all the stuff they had to go through with permitting and and finding the land and buying the land and then grading and all this stuff or whatever. And now these homes are going up. And with the homes going up and the market softening, these builders are finding it hard to be able to unload the inventory. And so the reason why I wanted to pair this with mortgage rates dropping is because these builders were offering incentives. This is where I'm at, and let me know how you guys feel about this, because this is another conversation I had with one of my realtor colleagues. These builders were offering incentives to buy down interest rates, either buying down them with a 2-1 buy down, a 3-1 buy down, or a fixed year rate of, let's just say, 3.99 interest rate. And so, or 4.99, let's just say 4.9, because I saw more 4.99s and more of the 3.99, the 2.99s was off of the buy down. So if it was a 3-1 buy down, I would see like a 3.99 or a 2.99. And if you guys don't know how buy downs work, say if it's a 2-year, it's a 2-1, it basically will be for the first year, say the interest rate is at a 6 right now, they'll buy it down to a 4. And then the second year it'll be the 5, and then the 5th year they can either lock you into an interest rate that'll be the life of the loan, or it'll be according to whatever the market rate is at the time. And so that's how the buy downs work. And so a lot of people were buying these new construction homes based off of those buy downs or those fixed interest rates. And with that being the case, these people, if they bought buy downs, they bought it on the assumption, thinking that in 3 years or 4 years, the interest rates would come back down as far as mortgage rates, and then they would comfortably be able to still have a particular interest rate. But that not being the case, because as we saw, interest rates didn't go back down, they've gone up. even though they're falling from 7 or 8% down into the sixes or low sixes or maybe high fives, interest rates have not peaked, have not fell, back down into the fours or the threes or the twos yet. And so some people might have had that in mind, thinking that they could possibly fall, those rates will fall back down, whatever buy downs they got from the builders. And with that being the case, some of these people might experience a sense of being underwater. So we're going to read a little bit about what KB, which is a home builder in America, what one of their COOs stated in regards to those incentives, or the incentives that these builders were giving to buyers, and why. And it's up to, and you guys let me know your thoughts on this too. Do you feel like, being that the builders have incentivized the interest rates with the buy downs or the fixed rate of a lower interest, do you feel like with the interest rates softening how they are now a little bit more as far as mortgage rates, do you feel like with the mortgage rates dropping that it'll make people get back into the housing market, just the average everyday buyer? There's always people buying, right? So I'm not going to say no one's buying, because people are always buying. You still have investors buying. You still have people that have to relocate buying. People going through divorce, death, whether they're going through probate, situations like that. Houses have to go up on the market. People have to sell. People have to get rid of things in regards to their life situations. But do you feel like if somebody that's an average person that's looking to buy right now with the mortgage rates softening, do you feel like that would put you back in the market, even though they haven't softened down more than the sixes or the high fives? MHOA said dissolving the HOA would be a concession I would take. I think a lot of people would take that concession as well if they would dissolve the HOA. A lot of people would love for HOAs to kind of be dissolved. If they're done correctly, they work well, right? But the problem is that they're done in a way in which people become very full of power, and when they're full of power, they're now fining you for frivolous things. So. But yeah, a lot of people would love to dissolve HOAs. I'm a fan of not living in an HOA because I didn't grow up in an HOA. When I lived in the house in Pennsylvania, I didn't grow up in an HOA. My mom's house in Jersey was no HOA. So I didn't grow up in HOAs, so I'm not a fan of them, but some people might have grown up in an HOA. I don't know. With the economy the way it is, do you think that the tiny home industry will boom? I don't know. It just depends on when it comes to the interest in tiny homes. If you are a person that believes in minimum space, if you do not want to be in a house of certain amount of square footage, tiny homes might be good for you. But if you are going to create a family, if you're going to have more than several children, tiny home might not work. So it just depends on your situation. As we do know, people that are being the younger generations, they're not having children like people did back in the day. So maybe it might create a boom. I'm still up for speculation with the tiny homes, in the sense of it's a great idea. It allows for homes to be quote unquote more affordable. And the reason why I say that is because down here in the Metro Atlanta area, these tiny homes to me still are not affordable. If they're starting at $249,000, that's not affordable. That's not affordable to me. If they were starting at $60,000, that's affordable. But they're starting at $240-something thousand. So affordability is really not in a tiny home. When you can go get a townhouse down here outside the Metro Atlanta area that can be $210,000, $215,000, more space, more square footage. It's a townhouse. And the tiny home communities, they all have HOAs as well. So if you're going to live in a community that has an HOA, you might as well be better off getting a townhome with more square footage. So that's how I kind of look at it, but it just depends on what people's idea is and what they ultimately want. It's a very niche market. It's a very thing of people want to experience certain type of living styles. So the tiny home market is, it's not for everybody, but it just depends on how you look at it. The purpose, I feel like, of a tiny home is that if I'm going to have a smaller home, I'm going to pay lesser money. But it offsets itself if it's the same price of a townhome to me. MHOA say no, prices are too high. Yes, prices are definitely too high. I agree with you, MHOA. And full of good evening, Donna. How you doing? I appreciate you joining us tonight. So with that being the case, MHOA say I would prefer a small home, not a tiny home. They are way too tiny. Yeah, so again, with a smaller home, like you said, the square footage is different from a tiny home. Down here in Metro Atlanta, Georgia, I'm trying to remember what the square footage is. I think if it can't be lesser than 400 square feet, I think. I gotta go and look at the square footage thing, but there's a metrics on what the tiny home could, what it qualifies at. I forget if it's less than 400 square feet or more, but it's around that parameter as far as square footage that it classifies it as such tiny home, as a tiny home. So it just depends on, again, the square footage. Like MHOA say, prefer a smaller home, but not a tiny home. And I'm like you, MHOA. I prefer a smaller home. It's okay to live in 1,100 square feet, 1,200 square feet. To me, even though the houses I grew up in, they were more in square footage, maybe about like 1,900, so they weren't big square footage in these houses. And both of the homes I grew up in, from the Pennsylvania home and my mom's home in Jersey, they both had basements underground because I grew up north. So different from down south, being in Atlanta, the lower level, I call them lower levels. People call them basements, but I call it a lower level because you can actually go out into the backyard and be on the grass. You go downstairs, you have a sliding door. In some people's houses, you might have a door in which you open up, you can go right into the grass. So I call it a lower level, but they classify it as a basement down here. So everybody says it different ways. David said, not a fan of HOAs. I know they have a purpose. Exactly, David. I'm the same like you. I'm the same like you, MHOA, my dad. I'm not a fan of the HOAs. I know that they have a purpose. That's why they were created, but now these people are going on power trips. So now I'm like, what's the point of these HOAs if they're not going to hold to what the purpose was that was in place when they first got established? MHOA said, I'm in a 535 square foot house, could use another 200, especially since I work from home. Oh, wow. So I'm like, so you are almost, according to the parameters down here in Georgia, you're in that tiny home area down here, so, but that, everybody doesn't need a big space. And I mean, it's just you. Why buy so much space? But everybody has their own way of how they want to live their life. So, but yeah, but then let's go over to what the builder, the COO said in regards to, Donna said tiny home. Okay, so Donna, you're into the tiny home. Or are you saying MHO8 got a tiny home? Let's go into what the COO of KB Homes said about new construction on a recent earnings call. So this call was in June 2025. So now we're in September. However, I wanted to bring this up because if this was in June, what will their next earnings call look like? And this is what he was saying then. What will they say now? So it says KB home buyers risk finding themselves upside down if they overpay for builder incentives. So he's saying that home buyers can find themselves upside down if they overpay for builder incentives. And so Donna said MHOA has a tiny home. Yes, that's a tiny home. That's a tiny home, Donna. MHOA. But so in regards to let's see, in regards to this, it says the COO said, I believe that there are builder customers that are overpaying for the home to effectively get an incentive. They may potentially be upside down when they try to sell that home, says KB Home COO Rob McGinney. So this is what the COO of a new construction home building, one of the biggest home builders in America, on their earnings call stated that some of these home buyers could be upside down in regards to these incentives. It says, since the pandemic housing boom fizzled out, major home builders across various markets, especially in top pandemic boom towns, have had to cut net effective home prices to avoid a deeper sales pullback. However, some builders like Lennar, D.R. Horton have primarily done so through larger incentives, such as mortgage rate buydowns, in part to protect community comps and avoid upsetting buyers already in their backlog. So this is what we were kind of talking about earlier. Even with these mortgage rates softening, the builders were already doing this type of stuff prior, and they're still doing it currently, right? Some builders use outside lenders to get buy downs for any buyers trying to buy within the community. And sometimes if you guys look at your CD or closing disclosure, you can see, or a loan estimate per se, you could see if you paying any points in regards to that buy down. So you might think that, okay, interest rates are 6%, and the builder's like, we can give you a buy down of, you know, a 2-1 buy down or a 30-year buy down at 5% or 4%. You're like, oh yeah. And then they're like, does that cost anything? And they might tell you, oh no, it doesn't cost you anything. But then when you get your loan estimate or your CD, your closing disclosure or your settlement statement, you'll see on there, go to like where it says points, and it might be like a couple $1,000s in there. So you're buying it up front sometimes in regards to that buy down. Some builders do have their own lending, so they have whatever they put in place with their builder. So when you get those estimates or the CD or the settlement, you might not see any points because the builder's lender is financing it and they're tucking it, and it's getting tucked in there somewhere. You might not see it physically, but trust me, it's in there somewhere. And then also they do a thing called like forecasting forward, where they kind of buy. Sometimes they'll buy, when they buy the land and they start the financing with these builders, they'll go out and they'll pay the lender in advance to get interest rates at a certain amount for a certain period of time. And they kind of forecast that, and then they're able to shift it into the loans as well. So there's a lot of different techniques in financing and lending. Again, I'm not a lender, so if you want more information about mortgage lending and try to understand how they are paying for the buy downs, how they are, if there's any money being added onto your loans and to your closing costs, definitely talk to your mortgage lender, and don't allow them to over talk you and get you confused, because everybody's good at that nowadays. People, then I kind of revert back to the question I asked. I asked the question. I'm like, I know a lot of people want to start with a story and have conversation and kind of tuck around what I asked, but I asked a specific question, so I need you to revert back to the question. Corey says a tiny home would be great. However, most that I've seen are 55 plus. Okay, so you're seeing more 55 plus tiny homes. Yeah, down here, like I said, in Georgia and Metro Atlanta area, we're seeing a bunch of little small tiny home communities be established. I actually showed one on my channel recently that was built around that Union City area in the Metro Atlanta area, closer to like the airport. But the home pricing of the tiny home started at $249,000. So to me, it's like it's a cute home. It's nice. It's a great community. But I think $249,000 is ridiculous for a home that's only 600 square feet. That's just my thing. Great builder, wonderful developer. I'm just like, that's ridiculous, because once you look at the per square foot and all these things, you start doing the numbers, you're like, baby, I can just go get a daggone house that with more square footage. So that's just me. Don't beat me up, you guys. Speaking to analysts on Tuesday, KB Homes, which prefer outright home price cuts over incentives. So KB Home, they are more doing the home price cuts. So they rather home price cuts than incentives. And this was a conversation that I had with a lender in my office. She's a wonderful lender, gives you great education advice. And a couple lenders that I've had on this channel that I had a conversation with, Kevin Jefferson, People's Lender, he's great. Demetrius Lockett, he's a great lender. So there's a lot of great lenders out there that can educate you about, about financing, right? And the lender in my office, we were having a conversation in regards to, she was saying that a lot of people that are buying new construction, they're going to find themselves, similar to what the CEO said here, they're going to find themselves upside down if they decide to sell within a couple years. So again, we don't know what's going to happen in life, right? Typically, when you buy real estate, you want to make sure you're in it for the long-term gain, right? You're not in it for a short-term gain unless you know how to invest accordingly, flip. Most people will buy for rent and hold and rent. But again, as life goes on, we don't know what is going to come of life. I've seen situations where people just bought a home and then their spouse passed away and they're like, I can't afford to live here. And they just got in a home. And so now they're forced to sell because they can't afford said home. So because of that, me and the lender in my office, we were talking. She was like, these people that are buying these new construction homes and getting these buy downs, more than incentives per se, more of the buy downs with the interest rates, they're going to possibly find themselves upside down if they try to sell it within the next couple of years, whether it be 2 years or 3 years from now, because they had with the builders typically do, according to the lender in my office, and then just me, of course, understanding the financing a little bit. Again, I'm not a lender. Let me just specify that. But just understanding the financing. What the builders typically do is that they'll raise the price of the house in order to be able to buy to kind of plug in that interest rate being lower. So let's just say they could possibly have the houses cost, let's just say $250,000. They could have the houses cost $250,000, but instead, in order for them to offer interest rates or incentives to people coming into the community, we're going to push it up to $350,000. So then that way we can then say interest rates right now are 7% per se. Let's just say hypothetical interest rates are 7%. Everybody's been crying about interest rates are too high because they can't afford to buy a home because the mortgage is X, Y, and Z, with the interest rate being X, Y, and Z. So the homes are $350,000. What we'll do is we'll buy interest rates down from 7% to 5%. So buying it from 7% to 5% might cost them, let's just throw out a number, $60,000 for said interest rates. And so they'll be like, okay, well, it's going to cost us $60,000. So let's bake that already into the price of the home. So let's put the home price up higher to bake in that interest rate that we're paying for you guys to be able to get a lower interest rate. And now instead of home being $250,000, it's $350,000. But you got your 5% interest rate, and we'll give you some incentives between the difference because we did a $100,000 difference. So we'll still make money on the back end for how much the home would cost if we didn't raise it, because it giving you guys lower interest rates and also giving you $20,000 in incentives. But if we could have did $250,000 off the bat, but everybody was crying that they couldn't afford it because of interest rates. So it's kind of like moving stuff around. And with that being the case, that can get people in a situation where, again, if you are trying to sell within the next 2 or 3 years, you might be upside down, and upside down in the sense of what's happening now. Look at what's happening now. Builders are cutting some of their home prices. KB Home said that they'd rather cut the home prices than do incentives. And so if they're cutting home prices and you're trying to sell, now you're selling at a lower price. Well, you have to sell at a lower price, even though you might put it back on the market at a price maybe you bought it at or a little higher. But because new people are coming into the development or the subdivision, they're like, well, your home was built in 2024. This home is built in 2025, because it might be several phases in which they're building. And they're like, this home is a little cheaper than that home. It's a $20,000 difference or a $30,000 difference. So I might as well go over here and get this home that's new, and maybe, with some incentives, some closing costs of $20,000 incentives. So just being mindful and understanding. So I don't know if that makes sense. I don't know if that makes sense to anybody. Let me know. He said that some buyers turning to some of their competitors are effectively overpaying for new builds just to get rate buy down. So this is kind of what we were saying. Didn't even read this part, but it's interesting that he's saying similar. And if they need to sell in the immediate future, they might not be able to fetch the artificially high base price they paid, which is what we were talking about too. That base price is higher because of the mortgage rate buy downs. And again, this was a discussion that I had with the lender in my office. I know they'd be getting sick of me in my office, because when realtors do come in, because there's not a lot of realtors coming to the office anymore. But when they do come in, I'm sitting down, I'm like, so what's going on? What you seeing? What's happening? Did you hear what they talking about with the with the feds, the CPI, how's the housing market going? What are you seeing? Because I'm seeing this on the back end. I'm seeing, how people refinance 3 to 4 to 5 times. And I might show y'all a glimpse of somebody that refinanced a lot. I gotta remember the address of that person. But MHOA said shell game. Yeah, it's a shell. It's definitely a shell game. And of course, I don't want to deter anybody from buying a house, right? My whole goal of this channel is not to stop you from buying real estate. The whole goal is to educate you and make you informed and make you knowledgeable, I should say, about understanding real estate, whether you're buying or selling. So it's not to say don't buy a house, because over time, even though we stay with these daggone property taxes forever and a day, but over time, it might behoove you to buy a house, because let's just say if you're renting from somebody that has a house, if you want to buy, again, if you don't want to buy, it's okay. But if you are buying, why keep paying somebody else's mortgage off when you can pay your own mortgage off? And at the end of the day, that person too, when you pay their mortgage off, they still gonna have property taxes just like you. So it's not a difference. The only difference is that you will just be paying your property taxes instead of, paying helping somebody else pay their property taxes. Because once they pay their mortgage off and the longer you're renting from them, now you're helping them pay their property taxes too. So it just depends on how you want to look at real estate. But real estate is too daggone high. It's too high. He said, I hate being behooved. Yeah, I know, MHOA. It's crazy. It's just crazy. And this is like the conversations that need to be had when people go into even new construction, or people are talking, because a lot of what's been happening lately in the news, and of course it's media, and we have a lot of conversations, and there's some wonderful realtors online digging into this information and giving you guys some great knowledge, like David Matney of Omaha, living in Omaha, Christina Smallhorn, Jackie Baker, Jen Sylvester, Joe Pareca. Like, these are all wonderful, and there's numerous other ones that are online educating people about real estate. And so, yeah, it's just trying to make the consumers a little bit more wiser, because we have been seeing with the houses being so unaffordable, and then the younger generations that are buying, that maybe their parents never purchased their home, they're getting into situations that they don't know the full, they don't understand fully what real estate, buying real estate entails. And then outside of just buying real estate, the home maintenance that you have to keep up with, the home maintenance, if you're in an HOA community, the home insurance, the property taxes, it's so many things that goes into home ownership. So you just want to be equipped with such, right? And even in the sense of, I had a client and they've now kind of went into the life insurance business as well. But even in the sense of, I think we talked about this on another live with life insurance, like if you are, if you do get life insurance, say if you have a spouse and children, and you want to possibly put life insurance in place in the sense of being able to pay off the rest of your mortgage when you pass away. If you don't have a substantial amount of money saved in the bank to do so, if your mortgage is not paid off, because your mortgage insurance that's on the mortgage and your home insurance and all that stuff, that does not pay off the mortgage. So if that's something that you want to make sure your family has in place, if you happen to pass and you're the one carrying that load of paying that monthly mortgage, you might want to get a life insurance plan so you can put that in place to do so, right? Or if you are, rich enough and you have enough savings, maybe create a trust, different things like that. That's the purpose of me, talking to Whitney, who is a trust estate planning attorney on the channel, having these conversations and bringing on insurance people and having these conversations so people can be more mindful and more knowledgeable, I should say, as far as when it comes to real estate, and just putting yourself in the best, I don't want to say the best light, but putting yourself on a great path to having successful, what am I trying to say? So having a successful, I guess, real estate dealing, I should say. MHOA said, you got peeps in Northwest Washington, Bellingham area. No, I don't have no peeps in that area. Why? Is there someone over there with the last name Clark or that might look like me? I don't have no peeps over there. No, I've never actually been to the state of Washington, but I've had friends that lived over there for a short period of time in Seattle. They were going to grad school over there, but I've never visited Washington state itself. All right, let's get back to this real quick. Like the COO said, he said, I believe that there are customers of other home builders that are overpaying for the home to effectively get an incentive. So they're tied into this higher price that they're going to be stuck with forever until they sell that home. They may potentially be upside down when they try to sell that home versus a clean, simple, transparent way of selling the value of what we offer. So again, he's stating that KB Homes, they prefer to lower the price and not really do that buy down, that type of incentive, but they'd rather lower the price, have you come in at the normal mortgage rate current to the market, fair market value with that normal mortgage rate, and buy the house as such instead of offering buy downs. Like they'll still possibly give incentives in regards to closing costs, but they're not going to give you like, they don't want to really do the buy down and the rates or whatever like that, because they feel like that'll put home buyers in a sticky situation if they're trying to sell sooner than later, because with them having that rate buy down, the base price of the home has been inflated, and now prices are softening, which will put people who recently bought that new construction underwater because of that them implementing that rate buy down and having to inflate the prices because of it. If that makes sense again. So it says KB Home says 2025 housing market is softer than they expected. So that's what we just mentioned. It says net new. Okay, well, it's not. Let me do it. But anyway, net new orders at KB Home by second quarter. So they had it from 2024, I believe, 2025. But as we go down here, it kind of shows you the number of homes in the different quarter and quarter two, and they're showing you through 2018 and 2025. This is during COVID, where they kind of sold lesser homes, and then they saw, 2021 they sold a lot more homes. 2019 they sold more, and then 2022 started going down. 2023 it went back up a little bit. 2024 it went up again, and then 2025 now they're down. So it says the actions we began to take late in our 2025 first quarter, evaluating base pricing in every community relative to local market conditions, then repositioning our communities with a focus on offering the most compelling value, led to strong net orders in March. He said, however, our net orders declined in April and May, which did not follow the typical spring trajectory. As we all know, the spring market has been wonky this year because of the uncertainty of things happening in the economy. They're not going out there to buy. They're realizing it's unaffordable for homes right now. The market is wonky as far as the uncertainty. People are getting laid off of their jobs. They don't know what's going to happen. And so people just didn't want to. Interest rates were, even though, again, we always talk on this channel as well, interest rates really are not high per se, but they're high now because the home prices are high. If you go and look at the trajectory of mortgage rates throughout history, 6%, 7% is the typical mortgage rate interest on buying a home. But now, because home prices are higher, it's offsetting a big amount as far as your mortgage payments. As a result, even though our average community count was in line with our projection and our cancellation rate was fairly steady, our monthly absorption pace per community was 4.5 net orders compared to 5.5 in last year's second quarter. So they're just kind of talking about this. This kind of goes into more about the different things they were saying. So this is one of the home COOs of a new construction home building. So again, the reason why I'm having this live saying mortgage rates have, dropped, what now, is because I really want to know what now, because we see them already doing that in the new construction housing market, adjusting mortgage rates lower than what they still are now. So now what's going to happen in regards to somebody wanting to buy now? Is it going to be a difference in people buying because they feel like it's softened a little bit, or people still going to be waiting on the sideline if they don't have to buy right now? And then also, do some of these people want to trade in the lower interest rates for a higher interest rate? If you were lucky and you got a 3% on your house, and you might not like the house that you're in, but you don't want to move because you got a 3% interest rate, or you don't want to move because you got a 2% interest rate. So there's a lot of factors that play into the sense of mortgage rates. So let me know your thoughts. If you're watching this on the playback as well, let me know your thoughts. Also, if you're new to the channel, let us know where you came in from. Hit the subscribe button, click the notification, hit the like button, and hopefully you guys will stay for a long time and not leave me. Also, if you are subscribed to the channel, just double check and make sure you're still subscribed. YouTube has been unsubscribing people from channels, and I have a little tiny channel over here with a great small community of people that I love to talk to each and every Sunday. So we just want to make sure you guys don't hopefully disappear. But MHOA said, love my house, hate the neighborhood. Okay, so you love your house, you don't like the neighborhood, so it must be a lot of different things happening over there, or is it around things that you don't find very appealing? Are you close to like train tracks, different things like that? I'm not sure. Okay, so this is another thing in regards to new homes now cost $20,000 less than existing homes. Can this trend last? So they're stating now that the new construction homes cost less than the resale homes. It says, as far back as modern records go, newly built homes have almost always cost more than previous owned homes. It only makes sense. New homes are expected to have far fewer maintenance issues, brand new appliances, designs suited to contemporary taste, plus they can be customized to suit the home buyer's needs. After all, it is only very rare circumstances that a used car will cost more than a similar make and model purchased brand new at the dealer's lot. Okay, but it says, but in recent months, the trend has been unpinned to an extent that has never seen, with the typical new home selling at a sharper discount to existing homes. In June, $407,200 was the median sales price of new homes, was about $28,000 less than for existing homes, a 6.5% discount, and by far the largest inversion in the last 25 years. It says the last month, the gap narrowed a bit to nearly $19,000 or 4%, still significantly larger than any discount seen before this year. July also marked the fourth straight month of price inversion for new homes, the longest stretch on record. So again, as we talk, builders are doing things to lessen the price of the homes, and with that being the case, the resale is now higher than the new construction. MHOA said, LOL, distant train tracks, but I do have the daily homeless parade. Oh, okay, so you're getting more influx of more people around your neighborhood that is homeless. Oh man, that sucks. I wonder, at the time when you bought it, did you see did you see a lot of homeless people there, or do you feel like because of the recent what the economy's doing and what's kind of happening in around America right now, that you're seeing more homeless people? That kind of sucks. We definitely don't want people to be homeless, and that's the reason why we talk about real estate over here, so we can hopefully put people in a good situation that they don't it doesn't lead to homelessness. He said it's recent. Oh wow, okay. So it's definitely I don't want to say it's all related to the economy, but it definitely, some of it probably is related to the economy and people shifting and doing things. So right here, this kind of shows you new home prices are typically higher than those of existing homes, but the long-standing trend has reversed in recent months, with new homes now about $20,000 cheaper than resale. So it shows you right here in regards to the new homes are in red, the existings are in black. So it's showing you that difference of that 422 to 404. This is a video which we don't want to see. So this kind of goes more and more onto affordability, which we already kind of know, the new home prices being cheaper. And let me see if I can show you this stuff real quick in my MLS. I gotta remember the house that it was. And see if we can pull this up real quick. So let me know in the chat if you're still watching us over here live and you want to kind of chime in. What do you feel about, if you are in the sense of, looking into real estate, purchasing, things like that? What are you feeling about these mortgage rates softening? Like I said, they didn't drop that much. MHOA said, LOL, and they're the crazy ones. Oh, geez. They might need to go and to the doctors to make sure that they're getting medicine to be able to handle whatever they might be experiencing mentally, because we don't want nobody going crazy, because not only can they hurt somebody else, they can hurt themselves. So, all right, let's see if I can find. Let me see. Okay. And let's see. I'm just gonna pull this one up because this is recent. What I'm working with, and we were looking at this together. So I figured I will pull it up for you guys. Oh, and I want to pull up one other thing too, because what I've been noticing as well, because I'm trying to work with a builder gentleman for his house, and so we've been trying to pull comps up in the area to kind of give him some ideas of where he can price at. I don't know if they end up changing it again, but some of these realtors are doing something with pricings, like they're changing pricings when things close, which is very interesting. David said, I think anytime it is going in the right direction, it is a good thing. Yes, yes. Got to make sure stuff is going in the right direction. That's all, right direction. Just like David says, anytime it's going in the right direction, it's a good thing. We want to make sure everything goes in the right direction. All right, let me go here real quick. And then I got to make sure I don't put this person's information in there wrong with them. Their name would be on here. So you guys can see what I'm noticing now with some people that are trying to sell. Either they're trying to sell, they can't sell, and then so they're either getting foreclosed on. They're finding some way to stop foreclosure process, whether loan modification, whether bankruptcy, something they're doing. But this is what I'm noticing with some people that are trying to sell right now, or have been trying to sell and they haven't been able to sell. But when I go and look at, let's see, okay, this might be okay because I don't think you can see the person's name. Let me show you what I see sometimes in the back end. And I'm gonna share this one, and the person might know. I was like, let me share this one because this one is very interesting. So this is what's happening when I look on the back end with stuff, and then things are occurring because people cannot sustain. All right, so this person refinanced one time right here. So I don't want to show the name. One time right here. I don't know if you guys can see me doing. Okay, one time right here in 2024, they refinanced. They refinanced again right here in 2014 again, which is the same company. So they might have, the price, obviously it was a difference as far as $2,000. So they probably just got the additional. Looks like the $2,000. This was like May. This is like in October. Or maybe the mortgage company went back and fixed the numbers or something. 2015, they refinanced again. 2016, they refinanced again. 2020, they refinanced again. So this person refinanced dang near, I think, 6 times. And it looks like it probably was a cash out refi because the mortgage kept going up from what it's looking like on my end. So with that being the case, eventually you get a foreclosure. And that's what I've been seeing lately in like our system. And there's a lot of realtors who down here in the metro Atlanta area, they don't want to be very transparent in some of this information. And I'm not saying every house is going to foreclosure, and I'm not saying every person is doing what's in the system. But what I'm noticing is that some people that are currently trying to sell, they've refinanced several times, and they're at the point where they're like, they're not able to keep it going, or the bank might not allow them to do it again because of situations, things happening. So they're like, okay, well, it has to foreclose. I have to abandon said property. Some people might just stay in said property. I don't know. But that's what I'm noticing with some of these current listings. He said, I'll check with Christina, Jackie, and Jen. Okay. To see if they have any peeps in Northwest Washington. Yeah, I don't have any peeps. Oh, are you talking about as far as realtor peeps? I don't know. As far as people that I know, no. Realtor partners, I don't either. So I definitely would talk to David. David might know somebody, or did he say no? Oh, he said unfortunately no. So David said no, he doesn't know of any. Yeah, so yeah, definitely talk to Christina, Jackie, and Jen. I feel like for some reason Jen might have some people. I feel like Jen might have some people because she has a vast network of people. So I would definitely check with Jen. But yeah, check with Jackie, Christina, and Jen. But yeah, I don't have anybody in Washington, so I don't want to lead you astray and say, yeah, I have somebody, because I don't. Let me see. And then let's look at this. So that was the back end for that property as far as that person refinancing. So that's what I'm seeing. So in the sense of mortgage rates dropping, you know, if you got into a new construction, or if you got in a cheaper mortgage rate, they didn't drop but so much. So I know some mortgage lenders are like, if you got a 7%, call me now. Let's refinance. And it's like, okay. But if you're at a 4.99 or 5%, but you still need the interest rate to go lower, guess what? At the end of the day, you can't refinance yet. So if the lender told you that that you could refinance, you can't refinance currently. So hopefully wherever you got in at, you're comfortable at, you felt secure at, because you don't want to go in and think that things are going to change, because we don't know. We don't have a crystal ball. We don't know anything in life. We don't know what's going to happen the next day from the next day. So do not put all your trust in somebody telling you like this is what it is, because you don't know. Make sure whatever you do in regards to your financial health, that you are good at whatever rate you lock in at. And if that rate stays like that for the next 20 years, that you're good at that rate on a monthly mortgage basis. Do not think don't go on a hope and prayer that you're going to be able to refinance in a year or 2 or 3. Just go in comfortable where you're at. Understand that, again, property taxes might adjust up. Sometimes it could adjust down depending on what type of situation you're going through. Like the great financial crash, it adjusted down. Right now, depending on you at, and if home prices are going down in your area, your tax bill might adjust down a little bit. Even though I know down here in Georgia, what they're doing now, which is funny, they trying to raise the millage rate, because they said the last 2 years they didn't raise the millage rate. So now that home prices are stagnant or softening in some areas, in order to still get that money from those property taxes, now let's change the millage rate numbers. So now when the millage rate is times the property value, we still gonna get more or the same than what we would get with the prices declining. But sometimes people say I need to go into politics, but I'm like, if I go into politics, they're gonna try to shut me up, and I'm gonna need a lot of people to have my back, because one person can't do it all. And then it's hard sometimes to get people to stick by your side, and I don't want to always be on my soapbox. MHOA said, I've been to PNW a few times. The last time I didn't like it at first, but after a couple of days, I caught the vibes. It's very agreeable. I can work in all but 4 states. Okay. PNW, I don't know what that is, so I don't want to be like, I don't know what that is. So PNW, what does that mean? Am I supposed to know that? I don't know. Let me know what PNW means. Is that according to Washington? Is that still in Washington? So I don't know what PNW means, so forgive me. Sorry, MHOA. Oh, Pacific Northwest. See, I'm like, am I supposed to know that? Okay. I was like, let me just make sure, because I don't want to. I don't know. So let me show you guys one last thing before I get off of here, because I know that we went over time, and I'm trying to keep it to an hour, so in that way I don't go over. So let me see if this comes up as far as what I'm seeing as well down here in Georgia in regards to manipulation, and what's kind of happening. So again, like I said, working with the builder. What? Now they can change the price again. The heck? They keep changing the price in the system. Oh no, this is the other one. Okay, hold on. That's the other one. Let's see. It's 85. Give me 1 second. So on the MLS and our MLS, and also, dang, it fell off. It fell over, you guys. But on the MLS, I got this holding this stuff up because this stuff is falling so quickly. There you go. On the MLS and in the back, don't mind me. Sorry about that, you guys. I got those. I had to have something hold that stuff up because it kept falling. Did they change it in here? They changed it. Did they change it? Okay, maybe they didn't change it. Okay, so maybe they went and they changed it. So what initially happened, and Zillow pulled it, but now they changed it in the backhand system. Somebody had bought a property and they had it listed that it sold for $875,000, but then when you look at how much it sold for, it had said $700,000. But now I just went and looked now and they changed it. So I don't want to put it on the screen because they didn't change it. So it's going to look like I'm crazy, but I'm definitely not crazy. I should have screenshotted it, but I didn't. But so people are manipulating things, playing with numbers. So I tell people, just be mindful, see what's going on. And the reason why I end up looking at that particular property is because, again, trying to get numbers for a builder, I just wanted to create comparables and see if it made sense for what his number was. That's what he wanted to kind of list that particular property as. So that's when I came across this property in these areas, and I saw the manipulation with numbers. But now somehow they've changed it, and I think they might have reached out to obviously to the deed department or whatever, because now they didn't change the numbers. I don't know how they did it, but to each his own. Anyway, you guys, Courier said Pacific Northwest. Yes, yes. I appreciate you guys joining me tonight. Again, I changed the setting. Let me know if this is better for you guys or you want me to go back to where I was at. I have this light now, so I get a little hot here and there. As you can see, I try to put a little stuff in the background. And I've been able to put a mic to the computer thanks to oh, sorry. Thanks to, I don't know, well, they said they don't want me to say their name, but I just want to still say thank you to them for giving me a mic. So, because typically I was microphoning out of my computer, but now I have the mic. Because I was like, once I start making some type of money off of the YouTube channel, then I would be able to put it back into creating a bigger and a better studio for you guys in the background. But I realize in business that you make money and you put it back in, but I ain't making no money yet, so I can't put it back in. So all of it is my money. But anyway, again, thank you guys for joining me tonight. I appreciate your time on a Sunday evening. And if you guys do not know or haven't visited David Matney's channel over on YouTube, please go and give him a subscribe. And also my other YouTube colleague buddies, I'm gonna pull David's channel. I'm gonna pull his channel up real quick so you guys can head over there, give him a subscribe, and also join him live on Tuesdays. I'm on Eastern time. He comes on at 8 o'clock my time, but he goes live based off of Central time. So definitely go over to his channel, give him a subscribe. Wonderful information, great videos. So you definitely need to head over to David's channel, please, you guys, and give him a subscribe and tune in on Sundays, and also go over there weekly because he puts out weekly videos as well. And then don't forget to visit Jen, Jackie's, Christina Smallhorn's channel, Joe Pareca, Mike Patel, all these wonderful realtors. Give them a subscription as well. MHOA said, wait, you'll get to 100,000 subscribers. Yes, we're going to speak it into existence, MHOA. Yes, from your mouth to God's ears, back down to the YouTube, to the YouTube gods. But I appreciate it. Thank you, MHOA. David said, you'll get there. Yes, and I appreciate David's help as well. David has reached out, has given me some great information. And so I appreciate David as well. David actually helped me get to 1,000 subscribers, reaching out to his community of realtor colleagues and his buddies. So I appreciate David as well. And I appreciate everybody for joining me to get me there as well. He said, I'll be one of those guys saying, I always remember when he had less than 1,000. Yes, but we'll always have our day ones from the day one. No need to rush. I learned so much from you, David and Jen. Well, thank you, Corey West. We appreciate you being on the channels, tuning in, listening to the lives, watching the videos. It definitely helps. MHOA say, do you watch Christina? Corey West, yes, he does. I think Corey watches Christina, not sure. Yes, love David's channel. I love David's channel as well. So again, you guys go over there, head over there, give them some subscribes, follow them, tune into their videos. And I will see you guys next Sunday here live. Hopefully we'll have a guest. I have to reach out to some people and see if they wouldn't mind coming on. But definitely, I appreciate you guys again. MHOA for being here, Corey West for being here, David Matney, my dad, Donna as well for tuning in tonight, and everybody else who tuned in that may not have commented but came in and enjoyed the show and had allowed us to have great conversation tonight. So take care, everybody, and I will see you next Sunday at 7 p.m. Eastern time. Bye-bye.